Hi again. Sitting down with Amber Segura with New American Funding, just talking about all things lending related. And I wanted to take a moment because I've had a whole lot of questions regarding down payment programs, USDA versus Utah Housing, which are the two most popular here, what the difference is, what it might mean to you. And there's nobody better to answer these questions than Amber here. So, Amber, if you don't mind, can you kind of break down the difference between these down payment assistance programs and what they mean?
Sure.
Perfect.
A lot of programs are available in Utah, and the most popular ones, like what Shay said, is the USDA program, which is 100% financing. It's limited to rural areas, and Shay could let you know what areas you could qualify on that. The nice thing is you have one loan, and it's the same interest rate. The mortgage insurance premium is lower than a Utah housing loan, so it just makes your overall payment lower in the long term and less expensive for you. Utah Housing has several different programs, and it's a great product if that's your only option. I don't want to discourage anyone because we can help people with lower credit scores with that product. You'd finance a second mortgage to cover your down payment and possibly some closing costs. And the interest rate is about 2% higher on the second mortgage versus the first mortgage. So you have two different loans, and it's an FHA mortgage. They do have a conventional option as well, but the mortgage insurance premium could be a little bit higher than your USDA, so it would just make your whole payment a little bit higher. Also, there's city grants available. Those are limited and they're based on income and household sizes, but we like to look at those programs just to make sure that we're maximizing everyone's options available to them. But that's pretty much the general synopsis, and I always tell people just to give us a call and we can do a full loan application, because that's the only way we're going to know what programs you can and cannot qualify for and the different options.
Perfect. Now, Amber, I'm a Dave Ramsey person. Love everything about it. It helped change my world. For those people out there that are the same, that want to utilize, let's say, the Utah Housing Program, because it's a little bit of a higher interest rate but a lower amount, of course, Dave Ramsey says, okay, pay off those kind of things first. Can you work to pay off that second mortgage to cover the closing costs first and then move on to the regular mortgage, or do you have to pay them both off simultaneously?
Actually, that's a great question, and yes, we do advise to pay off the second mortgage first. There's no prepayment penalty, and it leaves you in some more options, because a lot of people, once rates go down, we can do a streamline refinance for an FHA, but if you've done a Utah housing loan and you have that second mortgage, that won't be a possibility, so we'll actually have to do a full credit qualifying refinance. So by paying off the second mortgage, it does leave you some more options.
Perfect.
Yeah.
Well, as always, I really appreciate your help, and thank you for coming and sitting with a video again.
Of course.